Alrighty. Let's try something. There we go. Is that better? Okay. You probably noticed that I'm looking at this side rather than this side as before. Shifted a couple of things around in the office, so let me know if the sound works. Let me know if the video still looks okay. The background looks a little bit different now. I'm going to hopefully start decorating it a little bit. But yeah, we'll get started in a couple of minutes. Having a chat with Jan B and Nguyen over here. So if you are on a line or if you're watching right now, drop a message into the chat, whether you're on YouTube or on TradingView. Just say hi. Drop a message and say hi. I'm hoping the sound works. Does the sound work? Yes. Hey Luca, how are you doing? Sound is good. Okay, I tried to connect the sound directly to the laptop instead of through another device, so I hope it sounds a bit less robotic or distorted. Hey Ray King, and an average FX trader. Hey, change that name, the soon to be fantastic FX trader. How about that? Hey Nick, good to see you. Good day. Everything's okay. Just waiting for your view on the on the gold. I will do that. Oh, I have actually done that, but I'll elaborate more on that as well. Nguyen, do you only trade gold? Sometimes when people come on and they only ask about gold, I just want to know, is gold the only thing you trade, or is it the main thing that you are looking for analysis on? All right, one more minute and we shall get started. I've got a bad neck today. I can't turn past that. So my neck is totally screwed. All right. Anyone else dropping by saying hi? Where are my regulars? Where are my new people? If you're new to the session, say hi. Let me know where you're joining from. If you're a regular like Jan and Nick, good to have you guys back again. We shall get started right now. All right. Okay, so again, thank you all for attending the session. We are doing this, or I am doing this every day at 3 p.m. GMT plus 8. I just see folks 107 there from Berlin. So wherever you are, please put it into, well, I think you get a reminder on TradingView, but put it into your calendar, 3 p.m. GMT plus 8. I will be going through the daily market analysis where I do the review of the fundamentals, a preview of fundamentals that happened, a preview of the fundamentals or the news that could be released or is coming to be released. We look at the technicals, we look at where prices are, anything aligns, where the support levels are, resistance levels are, and then combining that together, we look for possible trade setups. Okay, so you all know the drill. If you have any questions at any point in time, please feel free, put it into the chat. Let me know. I will be happy to elaborate more, explain, repeat, describe it more for you guys. And also what I've just realized from last night, a big shout out to Pedro that Pedro sent a very nice message on yesterday's stream, and also directly to me as well, a direct message to me. Really appreciate the message there, Pedro. If you are watching this, if you're not watching this live and you're watching a recording of this, do drop a message. If you have any questions, you can either message me directly or comment into the video. I do check the video. I don't check all the videos. I check the most recent videos if there's any questions or things to talk about or things to elaborate on as well. Okay, so if you're watching this after the stream, you can still drop a message into the chat or message me directly. The other day, someone asked about oil. Message me directly for analysis on oil. Do that. I'll be happy to help you guys, help you trade better, help you get more profitable. All right. And before we get started, we were just having a chat with Jen there, and she was also saying, how's trading, and Jen B said, actually not really, too impulsive, too many small losses, need plenty of work. I'll give you a little bit of an insight, right? So the idea or the feeling that the feeling of impulse, the feeling of impulse is very common, right? You see price shooting up, or you see price dropping, and then you go like, oh, I have to get into a trade right now, before it's too late, and then my risk to reward is totally off or skewed. Then you're going to possibly mess up your trade that way. So, I face that too. Everyone will face that. There's no anyone who tells you that they don't face that is one, either not trading, or two, absolutely lying to you. Okay, so impulse, the FOMO feeling, the greed, the fear, it's all part of trading. Right? You can't make money if you don't have greed. You can't make money if you don't have a bit of fear as well. Right, the impulse is where you're actually watching the markets, you see price moving, and you want to jump into a trade. So it's all part and parcel of trading. What I actually have, sometimes I do, put up post-its on my setup here, just to remind myself, and then after a while it gets lost, right? Then I forget about it, or I write something else. So this is actually what I have most recently. I don't know whether you can see that. Oh, wait, there you go. Right, so Jen, it's actually quite funny that you were talking about that, because I actually had that, or I had it scribbled worse, a lot uglier before. So I actually rewrote it a little bit now for you guys to see, but it says wait for the candle to close. Right, it says wait for the candle to close. So I have that right beside me, within arm's reach, right, within my viewpoint, just possibly facing the same thing or similar thing to you guys, where just don't be impulsive. Post-it is there saying wait for it, wait for the candle to close. Get it. If I miss out on a trade, that's fine. If I wait for the candle to close, I might have a better setup or more confident setup. Okay, so that might help. I hope it helps. Let me know if it helps you guys. A small little tip, things that I do, just want to share with you how I, adjust and tweak my approach at times, right? So there's no one fixed way of approaching it. We're all humans. Every day there's a little bit of a change, a little bit of a different feeling. There are tweaks and adjustments that you do need to take aboard when you approach the markets. Markets are changing all the time. Humans are changing all the time. That's why this market is so interesting and so fantastic for all of us. All right. Hey, Mad Maniac, how are you doing? All right, so let's get to it. As usual, before we move on, a quick disclaimer. Any information contained on this webinar should not be construed as advice and is presented as educational material only. Right? Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Right? Don't jump into all the trades. Don't rush in. It's easy to say don't rush in, don't jump into all the trades, but try and prioritize your trade, right? I'll do that as much as I can for you guys, just so that we know, which ones to pay attention to more, which ones to look at it later, understand the leverage, don't take on too much risk. Maximum risk exposure at any point in time is 2%, right? Maximum exposure at any point in time is 2%. I do know some people who would, go for big trades and small moves and big trades, just to try and, have that big jump, right? I rather a consistent approach, same trade size. I don't value any trade more than the other, right? I don't think that because there is a news or because there is any particular setup is more confident or more or better setup, then I'll take on more risk. Right? I approach every trade the same. Every trade takes on the same amount of risk, um, just so that I treat every trade the same. Right? Because think about it, when you look at a trade and you think that you're more confident on this trade, and then you put in a bigger trade, or you put in a bigger lot size, what happens? A trade could either sit there and do nothing, a trade could go against you and lose money, and a trade could um, go with where you planned and make money. And unfortunately, we feel and we understand pain a lot more than we appreciate joy. Because if you are confident of a trade and you get into a trade and you make money, the big trade, you increase your lot size and you make money, you'll be like, yeah, I planned for it, I was confident, it made money. It's natural, is what it's supposed to be. You don't feel super excited, you don't feel extra excited or happy. You took on more risk, you made money as planned. But what happens is that if it sits right across and doesn't move, or it goes against you and loses money, then you're going to feel worse, right? But not just because you have lost more money, but also because the trade that you are more confident with, lost money, right? Went against you. So that becomes a bit of a personal, it goes beyond monetary, it goes towards personal emotions and personal effects as well. So, I forgot what I was going towards, but, I approach it all the same, just so that it comes down to the analysis. If I make money, good analysis. If I lose money, possibly something wrong on analysis or just bad luck. All right. So I hope sharing with you my approach of how I look at the markets can help you a little bit there as well. The H1 candle close, right? I end up looking at M15 to see what's happening, but maybe not a good idea. You spot on there, JNB. Don't, if you're trading on H1, or most of our trades I look at H1, then yes, look at the H1 close. There is that tendency to, scroll down to the M15, M1, M5, and then you get caught out with all the different price fluctuations and you get emotional with your trade. So yeah, stay on H1. Understand that price moves so much. Price moves so much throughout the time. Well, most of the time. If you do miss a trade, let it be. Right? Jump onto something else or look for something else to jump into. Okay. Hey, Ayakame, good to see you. So remember that the contents of this webinar is not intended to be a recommendation to trade a financial product. Please do your own due diligence before you jump into any trades. So with that said, let's get started. Oh, before I get started again, I do have a lot of digressions today. Just feel like rambling on a little bit. But just to remind everyone, where is it? Tomorrow, right? Just to remind everyone that tomorrow we will be having the daily market analysis at 3 p.m. GMT plus 8. And then I will take a short break, water, toilet break. And then at 4:30 GMT plus 8, we will be doing a short educational session on the Fibonacci retracement as well. All right, so tomorrow will be a two-part series. First part, 1 hour on the daily market analysis, and then second part, another hour at 4:30 on the Fibonacci retracement. All right, so do make sure you guys tune in for that. Hey, Lydia from Tokyo now. How's Tokyo? Sakura's out. I've seen a lot of pictures from my friends and family in Tokyo enjoying the Sakura. So I hope you have some great pictures on that. Okay, so that's for tomorrow. All right, so let's get to it. Forex Factory, pound yen. Okay, I'll get to pound yen as well. Forex Factory, what happened yesterday? Not a lot, right? Not a lot of things happened yesterday, even for today, right? So at 1 a.m. this morning we had Governor Bailey from the Bank of England speaking. Like I was telling you, it was at the London School of Economics, the LSE. so it didn't have too much of a price impact or price volatility there. Coming up at 4:45 GMT plus 8, we do have Governor Bailey speaking again, this time testifying to the deputy, along with Deputy Governor David Ramsden, about SVB before the Treasury Select Committee. Like I was telling you yesterday, I don't think this will be a big price mover, especially given the news now that the First Citizen Bank is or has agreed to, I don't know what the term is, or has agreed to or is going to acquire crisis. All right, so that's relatively good news, and that's why once we saw the slight alleviation of the banking crisis, we saw the somewhat move away from the dollar as a safe haven. We saw the dollar resume its downwards trajectory. Okay, following on from that, tonight 9 p.m. we do have ECB President Lagarde speaking at the opening ceremony of Bank of International Settlements. Again, not a policy event. I don't think this will be a big price mover. We do have a small news after that, 10 p.m. GMT plus 8, US consumer confidence number. Yeah, that's a bit weird. No related stories. I thought it usually shows me a past data. Was 102.9, expected 101. Think about consumer confidence, right? Consumer confidence leads to retail spending, right? Consumer confidence leads to retail spending. If if consumers feel like economy is not doing well, right? If they feel economy is not doing well, they might lose their job, they might get a pay cut, or inflation is too high, or recession is coming. All that put together, if they're not feeling confident, the consumer confidence number is going to drop. If consumer confidence number or the data drops, that is going to influence the retail sales number, right? Because they're not confident, they're not spending, retail sales number drop. And guess what? The biggest component of, or one of the biggest component of GDP is consumer spending, right? One of the biggest component of a country's GDP is consumer spending. So if consumer confidence drops, retail spending drops, GDP is going to slow down. GDP slows down, that's again another trigger for inflationary fears. All right, so this is a bit of the preempt, the first data that's going to give us a bit of an idea of that recessionary fear or that global recessionary fear starting from the US. So we're looking at 102.9 to 101, right? That's likely to continue pushing the dollar to the downside. If it does come out at that 101 level, if it comes out below 100, that's going to be terrible. We're possibly going to see a big downward move. And then following on from that, we do have the Aussie CPI data tomorrow morning, early tomorrow morning, 8:30 a.m. GMT plus 8. Good news, well, potentially good news, is that CPI is expected, forecasted, or anticipated to drop from a 7.4% to a 7.2%. A slowdown in CPI year on year signals a slowdown in inflation growth. A slowdown in inflation growth is going to alleviate the RBA's impulse, right? We're talking about impulse or intention or need to continue raising rates. So this is going to be an important number here tomorrow morning at 8:30 a.m. If it comes out at that 7.2 or 7.1 number, or even below 7, then we're going to see some good volatility on the Aussie dollar. I'll show you an example here. So the last time was 8.4, expected 8.1, came out 7.4. So when we look at the Aussie dollar, on the 1st of March. Where was it? Let me find it. Where's my 1st of March? Okay, there. And this was at that 8 a.m., 8:30 a.m. time, right? So you can see that we saw that big drop, well, relatively big drop at that 8 a.m. time. It went from 0.6730 down to that support level of 6699 or 6700. So hit a round number support before bouncing back up again. Okay, so there was that drop. Why it traded up? Because 7.4% is still significantly higher than the target level of that 2 to 3%. Good morning, M Leader. How are you doing? All right, so that's going to be interesting tomorrow morning or wherever you are. Aussie dollar CPI year on year looking to go from 7.4 to 7.2. We might even see maybe 6.9. We shall see, right? But for sure, if we see a number that's more than 7.2 and even more than 7.4, we're going to see potentially big upside on the Aussie dollar, because that's going to mean that the RBA would have to keep increasing rates, or to talk about more rate increases. And just why it's so important is because we're on the 29th of March now. Where has the year gone, right? 3 months down already. Next Tuesday, we do have the Aussie interest rate decision to be released. All right, so it's only a week away. So this number is going to be very important to lead to where the Aussie dollar could be heading towards, right? In the short term and in a slightly longer term into next week with the RBA interest rate decision. Hey, Angel Case, how are you doing? You guys all turning up at this time. You missed the most important part. The first 10 minutes, I did a whole brain dump, somewhat of a brain dump, psychology talk. So catch the replay. All right. With that, not much else news until we catch up again tomorrow, same time. All right. So with that, let's look at the charts. So this is now changed to the 28th. All right. The last time we spoke about the dollar index. This is dollar index chart on the H1 time frame. The last time we spoke about the dollar index, I was saying that I was looking for it to trade lower, breaking 103 towards that 102.50 level. And look what it did. It broke. So at 3 p.m. yesterday when we were talking, it was trading right at that level. It broke below 103 and then traded down towards that 102 almost towards 102.50. It's along that 102.60 price level. All right. So just an update is that it's likely to consolidate, because you realize that we don't have a lot of news events today for the dollar. Why it dropped, like I was sharing with you all, it's that alleviation of the banking, or slight alleviation of the concerns over the banking risk, given that the First Citizen Bank is acquiring SVB. So that's why we saw this move, the resumption of that downtrend, right? So talking about the resumption of downtrend, I'll take that away because it's slightly irrelevant now, right? It's broken that trend line. It's forming another, maybe forming another trend line to the downside. Not a great one, but it does work somehow. Okay, so it's forming that. What I'm anticipating here is that it's going to just be, I want to see it break below 61.8, so about below 102.50. I think that it can come to test the support level at 102. All right, so DXY consolidate at 102.60, break 102. 102.50 to 102 support. Alrighty. Okay, so this the paints the bias. It paints the bias of where I think prices could head towards right across the board for all the other currency pairs. Right. So if I see, for example, this is how I would approach this. Right. If I see, for example, the let's say the Aussie dollar right now consolidating, that's fine. If I see it trading down, then I'll be like, wait, I'm expecting the dollar to drop. If the Aussie dollar is trading lower, that doesn't make sense. I'll be waiting to buy it back up. Okay, so that's how I kind of look at the news, anticipate where prices should be heading, look into the charts, build on to the anticipation, and then look into the individual currency pairs to look for the alignment. So you can see this pushing down slightly, but then the dollar, I'll zoom in a bit so it's easier to see. Bring this down, all right? But then the dollar is still trading downwards. So that's where, I'm going to sit out, I'm going to wait for this. Okay, so while I have the Aussie dollar chart on, let's look at the Aussie dollar. I just did the Aussie analysis actually, so I was looking at what am I doing? I was looking at this as a support level on the Aussie. I like 0.67 as a good resistance level, right? We spoke about this. No, so we spoke about this yesterday. To sell down didn't work, right? It didn't trigger. So we're talking about 6635, 663. Well, 6635 didn't. 6635 didn't trigger, right? So it didn't trigger. It shot up instead. So what I'm actually looking for here, with that dollar weakness or anticipating that dollar weakness, I'm looking for this to push up. I'm looking for this to push up. Quite simply, needs to break above 0.67. Needs to break above 0.67 before I'm going to see significant upside. It's a nice round number as a resistance. I have about 50 pips to the upside. I have about 20 pips stop loss as it breaks above that resistance level. I'll be looking to buy. Let's be a bit safer and say 0.6710, 25 pip stop loss, 40 pip, 45 pip take profit, or 50 pip take profit. Almost a 1:2 risk reward ratio to the upside on the Aussie dollar. Right? Not ready yet. Needs to break above that round number level. So I'm looking to buy the Aussie above 0.67 with my stop loss about 25 pips, my TP about 50 pips. Looking at a 1:2 risk reward ratio for the Aussie dollar. All right, any questions so far? Let me know. Then we'll look at the Kiwi dollar. All right, Kiwi dollar, look at that. So when I look at this, when I look at many charts, I'm always clicking across all my charts. All right, if you sit here and you trade with me, half the time, all you'll hear is me clicking away because I'm looking at different charts, different time frames, charts and time frames. I see, the Aussie dollar sitting right across, consolidating, but we understand that there is a what's it called? There is a correlation between the Aussie and the Kiwi dollar. Right, there's a correlation between the Aussie and the Kiwi, obviously with the dollar index as well. So given that the Kiwi dollar is pushing so strongly to the upside, that gives me, some confidence, or I can anticipate a similar move for the Aussie dollar to the upside as well. Okay, I'll adjust this line and say that my resistance is at that almost 6.3, but I would say this 6.280 as a good resistance level. Support level is fine down there at 6150. We do have an interim level here, right where it is at 6240. Let's do 6240 as a bit of an interim resistance level. All right, so again, we can see it pushing up. What do I have over there? Let me see. That's fine. Okay. So we can see it pushing up on the Kiwi dollar. What I'll be looking for, short-term trade, right? This is a possibly earlier than the Aussie dollar, where I'm looking for this to push up towards that 6280 resistance level. It might be a bit early right now, so I'll be looking for this to break above 6240. You can be looking at about 6250, right? I would like to put my take profit at that high, right? So I would like this level here, very close to that 0.63 level. Stop loss can be about 25 pips, so about 50 to 25 again, similar to the Aussie dollar, a 1:2 risk reward ratio to the upside there on the Kiwi dollar as well. So 6250. Buy above 0.6250, stop loss 25, TP 50. All right. Makes sense, and you can see dollar really pushing down quite strongly now. So I'm looking forward to this move or this move on the Aussie and also on the Kiwi dollar. All right. Any questions at this point? Let me know. Hey, today I'll tell you all. I was going to say, hey guys, remember to click the thumbs up and the rocket ship button on TradingView and on YouTube. But today we have the TradingView guys winning the YouTube guys. So well done, everyone on TradingView. More rocket ships than thumbs up on TradingView than on YouTube. Good job. All right. Just little things that gets me excited. Okay. So like Nguyen was asking, let's look at gold. All right. Gold, I will share with you yesterday when we were talking. Did I talk about this yesterday? I can't remember now. I was looking at gold yesterday because I know I did it on a different platform. Let me see. No, I didn't do it. Okay. Never mind. All right. Where was it? Yesterday. So I wrote about gold here. I had two charts on it. First time I did a two-chart thing. Basically, we were talking about on the H4 time frame, there was a double top formation, right? A double top formation, which is why we saw this push down. We're looking for it to push down, and then on the H1 time frame, again that double top formation, looking for it to trade to the downside. That's why on gold, I was looking for it to break 1965 down towards the 1935 level. So 1965, it broke, and then it didn't go all the way down to 1935. It went down to 1945 and then bounced back up. Okay, so that's not a support level now. That's a resistance level. So now, we saw it trade down, we saw it bounce back up, hit that level, and then it's retracing. It's right now at 1955. Anticipating that dollar weakness, anticipating, we're seeing Aussie, we're seeing Kiwi, and we look at the other charts, we're likely to see it gain against the dollar. That's going to signal, dollar weakness, which is going to drive gold back up, right? It's likely to drive gold back up. but it's not ready for a trade now. I would say that it needs to break above 1964 or 1965 to trade back up towards that 2000 level. Unfortunately, what I think is that gold is likely to be trapped, right, for the interim, likely to be trapped between this 2000 level and that one or that 1935 support level, right? So it's likely to be trapped between these two price levels, with that 1964 or 1965 level as a bit of a midline, as a bit of a in between point. So what I'll be looking for here is if the dollar continues dropping, I'm looking for this to push up, right? So at about, you can go about 1970. You can be looking at about 1970, trading up towards that 2000 level. Stop loss, well, I'll keep it tight. I'll keep it relatively tight at about 1960. Okay, so there you have it. That's gold possibly going to trade up towards that 2000 level again, just to test that resistance level. But I think that's going to be trapped within this range with 1965 as a bit of a decision, a mid level there. Okay, what do I have here? About 300 pips and 100 pips. Okay, so gold. Gold, possibly to buy from 1970, stop loss about 100, TP about 300. Is it 300 or 30? I think it should be 30. Yeah. Okay, let's just have it there. 30 or 300? I can't remember now. Okay. That's right. Okay, cool. Any questions? People on YouTube, all good? And everyone on TradingView, all good? Let me know. Type in and say good if it's good. Type in and say terrible if it's terrible. You have to type something. All right, all good. Fantastic. Thank you. Ayakame, hi Chinon. Perfect from Mad Maniac. Thanks, Nick and Mare Malvelli. All right. So with that, I love this one. This was a very nice one that we had. We spoke about this yesterday on the yen. Look at that. So this was what we spoke about on yen, selling from 131.50, stop loss 30, take profit 160, possible head and shoulder. You can buy up from 131.80. And look, we had that inverted head and shoulder there. We had our buy at 131.80, didn't trigger, so take that away. But the analysis or the view that it was going to hit that trend line and trade down, I did actually get into that trade, right? I got into that trade. I didn't get in right there because as it was trading up, I wasn't ready to put in my order. Can I move this to the side first? Okay. So I actually got in this morning, early this morning. I saw this hit, test, and reject, breaking back into that trend line. I did get in at about 131.20. Yeah, I got in at 131.20. Like we were talking, I waited for that to close. I saw a push down again. So I got in there. This was my trade, 131.20. I did have my stop loss at about 30 pips, and then my take profit was at 60 pips there. So I had a 30 there, 30 to 60 pip, 30 pip stop loss, 60 pip take profit. I was very concerned about this 130.60 level. just because we saw it bounce many times and it's bouncing again right now. So I was very happy to get out of that trade very quickly, right? That was within the hour, actually more slightly past the hour, just because it came very close to my take profit, didn't hit, bounce, and then after that it went down, hit my take profit. So I was very happy with that trade. Got in as well on a pending order. Fantastic, Nick. I'll give you a big high five, a virtual high five. All right, good stuff. Good stuff. So that was my 60 pips early this morning on the US yen. A bit fortunate, I woke up early as well this morning. All right, so now it's bouncing back up. How long will pound yen go? Okay, we'll get to pound yen right after we check out the US yen. All right, so it's tested that 130.60 level. It's pushing back up. It's a bit curious why it's pushing back up, given that the dollar is pushing down, right? So predominantly we see, the yen, the influence on yen, on the US yen being driven by the dollar index. But what we're seeing now is that dollar dropping, but yet we're seeing the yen push back up. This signals to me that there is a rather significant shift away from reserve. Right? There's a rather significant shift away from reserve. There's a move away from reserve currency, which is what we saw on the dollar index. Yen is a reserve currency as well, so it's a shift away from yen. And also, if you look at gold right now, it's actually trading down, right? Gold is actually trading down, so it's actually a shift away. We're looking for this to push up, but it's actually pushing down, so it's a shift away from the reserve commodity as well. All right, so so that's pushed back up. That's pushing back up. All right, not going to mess with this profile. I'm going to jump back to my webinar profile again. All right, I have to be a bit more disciplined with my profiles because I do a lot of writing for many different places, and then if I mess up all my profiles, it's going to be terrible. So US yen. All right, we saw that trading down, is hit that 130.60 support level, bouncing back up. It's too late. It's too late to try and rush into a trade right now. Right? It's too late to try and rush into a trade. Why so? Is because pushing up, but the dollar is trading lower, and then we know that we have a bit of a level here at that 131.80 price level, right? Almost at 131.80 price level. It's right in the middle, right? So if you're looking to, for example, buy up from here, then it would be a 50 pip stop loss. It would be a 50 pip take profit, a 70 pip stop loss. Terrible risk to reward, not worth the entry. So ignore that, right? Let it move up. Let it move up. It will be a trade foregone. I do think that it's going to trade up possibly towards that, maybe up to this point here, just because of the tails here and those levels there. So that 132.25 level, right? So let it push up. If it does break above this level, then we could see big upside potential or more significant upside potential on the US yen. But I think that what we could see is come up to this point and then we'll see it rest at that resistance level. Okay, so I would say no trade on the US yen despite anticipation that it's going to move up. US yen, we did a good trade yesterday or this morning. US yen, no trade, but should be moving higher, easily higher. All right. Literally my thought process. Okay, so with that said, let's go to the pound yen. Pound yen. All right. When did we talk about this? We spoke about this yesterday. Buy above 160.40, stop loss 80, TP 160. This was the trade. 160. I'm sorry, I'm flicking around a bit too much. 160 or 155 level. It's getting there. It's going to hit that resistance, that 162 resistance. If you haven't got into a trade, Ian and also Lydia, if you haven't got into a trade, or if you are in the trade, then I would say look towards that 162 level. You should have your take profit there. Respect that level. Look to get out at that point. Okay. Why I'm a bit concerned is because you can see that at 162, it's over the couple of times hit and turned down. Even most recently, last week, it came very close before turning back down. Same thing most recently this morning, early this morning as well. All right, so it is pushing up. One reason why I think it's pushing up is also because of the pound dollar pushing up as well. So, and also the US yen pushing up. So with all that combination, we are going to see it push higher. If you haven't already got into a trade, then I would say look for it to break. If it breaks and closes above 162. Head and shoulder on H1 time frame. Okay, I'll get to that on the US yen. So if it breaks above 162, possible quick trade. All right, so I'd say 162.30. An 80 pip take profit, a 40 pip stop loss of 1:2 risk reward ratio to the upside again. Right, so I'll put that resistance there, and then you could be looking at that on the pound yen. Okay, so pound yen, I would say a quick revision on that is break above 162, 162.30, 40 to 80. Where are we? Okay, so needs to break 162, buy from 162.30, stop loss about 40, TP about 80, and take away the rest. Okay, so Harith said that there's an edge and shoulder on the H1 time frame on the US yen. I think what you are probably referring to is a shoulder, head, and then a possible shoulder. Harith, if that's right, let me know. So it needs to come up to this point and then turn back down. And then we're going to see that development of the head and shoulder. Then it will need to break, you need to come down, break this 103.60 neckline before we're going to see that big downward move. Quite a bit of things to happen before then, so it's worth noting. But I would will be up, then two shoulders, one head down. I will be up, then two shoulders, one head down. Not sure what you're referring to. Yeah, I'm not sure. I don't see the other shoulder yet. So I think this will be a head, shoulder, and I need to see one more shoulder, which could happen. But yeah, I think it does need a bit more price movement for that to develop. Okay. Fair enough. Good. Okay, so we've done gold, pound yen, Aussie, Kiwi, and yen. Now let's look at pound and euro. Hey, look at that. Pound, I said nothing now. Look for it to climb to the 1.23. Pound yen is more reverse head and shoulder on the hourly, inverted head and shoulder on the hourly. I'll be watching for 162.30 area too. either break up further or just reject it. Okay, so let's get back to pound yen again. M leader said it's more an inverted head and shoulder. Yes, I think you're referring to that head, shoulder, and then that shoulder. Might not be or that one there. Those two as a shoulder. With ultimately with this level or that 162 as a neckline. So yes, if it does break above that, then we have the inverted head and shoulder for that big upward push. Okay, cool. Good. I'm super happy that our views are relatively aligned. Okay. So your pound a dollar. Oh no, I messed up. Hang on. Go back to that. Okay. So pound dollar. We were talking about this yesterday. No trade. Nothing now. We're looking at it. Nothing now, but we're looking for it to climb to that 1.23 level. At 3 o'clock, we were there. We were at that point, and then it did climb up to 1.23 and also slightly beyond. Now, it comes to that point where it is going to be interesting. Silver. Okay, I'll get to silver as well. It's the interesting level where it rejected several times and then traded back down. Right now, again, testing that point. Could it break? The question is, could it break up? Could it trade higher? Right? But look at that. It's actually had a suddenly big drop down. Despite the gold still, well, despite dollar still indicating some downside. Any news? Nope, I don't see anything coming out. Okay. So again, looking for this level, what could be interesting is that, given the way it's reacted off this point, we could be looking for a counter trend. You guys know I don't like counter trend. But if it breaks below 1.23, about a 40, 50 pip stop loss, about a 80 pip take profit, almost a 1:2 risk reward ratio to the downside on the pound dollar. This is on the flip side if we do see the dollar regaining that strength again, right? So we keep talking about dollar weakening, dollar weakening. If, for example, the dollar does regain its strength, then pound dollar could trade significantly lower, quite similar to what happened last week on Thursday. All right, so, and then that's going to mess up pound yen as well. So just be extra careful there on pound yen, especially as it trades to that 162 level. Okay. Pound dollar, we were looking for it to reverse, to trade down from 1.23. Stop loss is, I forgot, about 40 to 50 pips. Take profit about 80 pips. So stop loss is about 40, say 50, and TP is about 90, almost 80 to 90 pips. Okay, so that's the pound dollar looking like it's reversing quite strongly. So let's, that should be something quite interesting as the price. It's triggered a trade. I didn't get into that one. I did have my pending order there. We were talking about this, looking to break 108 to buy from 108.10 for a big move, right? So 108.10 to trade up to that upside. Looks like it's going to hold. I would say that 108.10, or if you haven't got into the trade, then I would say 108.40 would be reasonable. Stop loss about 40 pips. Take profit 45 pips. Take profit about 90 pips. A 1:2 risk reward ratio to the upside there. Right, so I like that one. Just a bit of an update on the euro dollar. It did break, so it broke 1.08. So I'm looking to buy at 1.0840. Yep, 40. So it's quite interesting that we're seeing. Um, wait, I can't do too many things at one time. Okay. Stop loss about 45, TP about 90. Okay, so I was going to say that it's quite interesting that we are seeing the euro still pushing to the upside, and then the pound actually showing some weakness, consolidating at this high point, right? So that when you think about it, euro looking like it's going to push to the upside, pound consolidating a little bit, then that's going to give the euro pound quite an interesting move. So, like Haref was just asking, any entry now, please? Firstly, please remember before you do jump into any trades, do your own due diligence. But what I'm looking at, right, pound dollar consolidating, possibly dropping, euro dollar looks like it's pushing to the upside. All that now looking at the euro pound found a good strong support level at 0.8772 or 8770, now pushing to the upside. Could have been a good trade to get in at the start, but if not, then I have a resistance here, support level there, um, an interim level at this point at 87, I'll say 8088.88. So what you could be looking for here on the euro dollar, if that move continue on the euro and on the pound, right? That 50 pip move to the upside, stop loss. I'll say because it's breaking the interim level, you could either go, no, I would say do 30 pips. So it's not a great risk to reward kind of setup, but it looks like it could push as it stays within that range. So 88.88, about 35 pip to 50 pips. All right, so Euro GBP buy 0.88, stop loss 35, TP 50. Why is my buy funny? Okay. Euro pound hurt me many times last week. I was always short lived on this pair. Very choppy. I do agree with you, M Leader. It is very choppy because you do have to look at the way the euro dollar moves, the way the pound dollar moves. It hasn't been in a trending scenario over the last week, especially. So it has been choppy, but it is a good one to trade, especially if the dollar index doesn't show any clear directions. Something this will be something that I look at when I can't find a clear direction on the dollar. All right. Now, Kalun asked about what was it? XAG. Oops. XAG USD. Can't type. Go. Consolidating, found a support. So this is silver, found a bit of a support here at that 22.90. No, wait, let me just do this. I got my resistance there. I actually did a very nice analysis on silver and how it leads or how it relates to gold. But I'm not going to try and find it. It's going to be hard to find at this point. Support level there, I would have a bit of a trend line to the upside. Right, so we can see that happening as well. You know what? Looking at the way gold is moving, let me just add this in. I'm gonna trade down. or I rather not enter a trade. If it does trade down, then we're possibly going to see silver trade down as well. So what we'll be looking for is if price breaks below 22.80, breaks that trend line first, that bullish trend line, and then breaks that support level at 22.80, with the next support level here at about 22.27. Yep, I like this level here just because we have all that as well. Okay, so if it does break down, looks like it's bouncing a little bit, so it's not ready yet. But if it does break, then we're going to look for this move to the downside, but it does need to break those points first. All right, Kalun, hope I got you there for silver. Alrighty, cool. And then Swiss franc, not exciting at all. Swiss franc sitting right across, hasn't done too much. Between support and resistance, do nothing. I would say it's the same thing, because when we spoke about this yesterday at 3 p.m., it was exactly the same price as it is right now. Right? It's exactly the same price as it is right now. Same price, same analysis. That's it. Then US CAD, right? US CAD was actually very interesting. US CAD, I would say buy 1.3750, stop loss 25, TP 50. Didn't happen, right? It didn't trigger. It went to that resistance, rejected that resistance, and turned straight down. Turned all the way down. It broke that near-term support level at 1.3650. Why did it break? I did that analysis here. US CAD, right? So I was actually quite perplexed on why did it break. So it was really because oil started trading higher, sorry. It pushed quite strongly to the upside, and that's why we saw the CAD strengthen, pushing down together with that brief weakening of the dollar index. That's why we saw this trade down towards that support level of 1.3650. Okay, but you can see that, put a bit of a dotted line there. You can see that this level holds quite well. I would like to say it's going to bounce, but I'm not going to be super confident about that. We have a bit of a head and shoulder pattern there as well. It could. I'll more likely say it's going to trade lower. I think that it could bounce, but any bounce could see a resistance and then a trade back down again. Hey, Bill from Athens, how are you doing? All right, so I think we could see a bounce on the US CAD. So we could see a bounce to trend line, but I'm still looking to sell down below that 1.36. Sell down below 1.36. You know what? I think it's going to bounce, but I'm not too sure what is going to happen next. It's going to possibly, so I'm going to say that don't trade the US CAD for now. It's just at that level, at that support level where it could bounce or it could do something. So it's likely to retrace to the trend line. All right. Okay. That's good. Done, and it's going to retrace slightly. That's fine. And then now NASDAQ. You guys, I feel so bad when I look at NASDAQ because I'm looking at it fully as a technical point of view. I think the last time I was looking at this yesterday, I was saying that it's found at big resistance level. It's going to trade down. is doing that right now. It's broken that trend line, so we're going to see some downside. I think that we do have an interim level at about that point, so about 12,614. Breaks there, we could see it trade down towards 12,429 or 430. All right, no worries, JMB. Take care now. Okay, so yeah, straightforward. I think that we saw a big push of breaking of that bullish trend line. Now we're looking at it possibly retracing. If it does break 12,614, then we're going to see it trade down towards 12,430. All right, Marmel Valley. All right, so with that said, we have our list here. I'll post that up shortly after this session. Again, if you are watching us live, do me that big favor, put that thumbs up, put that rocket ship button, click that button. If you're watching us after as a recording, thank you for joining. Do help me out, click the buttons as well. And if you have any questions, any requests, anything at all, drop me a message, put it into the chat, let me know. I'll be happy to help you with your trading journey. With that said, please remember, trade well, trade safe, and I'll catch you again tomorrow, same time, same place. Take care now. Bye-bye.